Welcome back to the channel. Today we are conducting an exhaustive deep dive into Chevron Corporation's Q4 2025 earnings results. As a global energy giant, Chevron's numbers provide a critical look at the state of the oil and gas markets and the company's operational efficiency. With the stock reacting to recent financial data and management providing updated projections, there is much for CVX investors to understand. Before we break down these detailed financial tables and charts, please like this video and subscribe to the channel for more institutional grade market analysis. Let's get into the Chevron report. We begin with Chevron Corporation's current market standing on the New York Stock Exchange. As of the latest reporting session, CVX is trading at $196.97, marking a strong intraday gain of 2.0%. This upward move of $5.18 reflects a positive market reaction to the recent results. This snapshot provides the essential context as we transition from price action into the fundamental financial statements. Understanding the current market valuation is vital as we analyze the underlying revenue and profit data that will likely dictate the next major trend for this energy leader. As a massive component of the global energy sector, Chevron's performance here often sets the tone for the entire industry. We will now move into the specifics of their latest performance metrics to see what drove these recent market movements and how the company is positioned for the coming fiscal year. Diving into the core performance data, we see a detailed breakdown of Chevron's recent results. For the fourth quarter of 2025, the company reported a basic earnings per share of $1.9 and a diluted EPS of $1.9 as well. While this represents a year-over-year decline compared to the much higher levels seen in early 2024, the company maintained a robust EBITDA of $9 billion for the quarter. This marks a significant 28% year-over-year increase in EBITDA, demonstrating strong operational cash generation despite lower per-share earnings. The total operating expenses for the quarter stood at $41.3 billion. The number of shares outstanding has increased slightly, reaching nearly 2 billion. These figures highlight the scale of Chevron's operations and its ability to maintain massive cash flows even during periods of market normalization. For investors, the strength in EBITDA is a reassuring sign of the company's underlying operational health and its capacity to fund future projects. The income statement overview reveals the top-line results for the most recent quarter. Total revenue for Q4 2025 reached $45.2 billion. While this is a slight decrease compared to the previous quarter, the company maintained a gross profit of $6.0 billion. Operating income for the period was $3.0 billion. And after accounting for taxes and other adjustments, Chevron reported a net income of $2.0 billion. The visual data shows a steady revenue performance over the last several quarters, generally holding between $40 and $50 billion. This consistency is a hallmark of a mature energy giant with diversified assets. For investors, the key narrative is the company's ability to defend its margins and deliver billions in profit even as the revenue environment fluctuates. The relationship between the massive top-line revenue and the bottom-line net income demonstrates the scale and complexity of the global energy business and Chevron's successful management of its cost structure. Breaking down the revenue by segment, the dominance of Chevron's downstream operations is immediately apparent. Last year, the company generated over $189 billion in total revenue, with the largest portion, $130 billion, coming from its top-performing segment, downstream. This is a slight decrease from the previous year's $146 billion. The upstream segment also contributed a massive $53 billion. Geographically, international operations provided the greatest contribution, accounting for over $99 billion, while the United States remains a critical domestic engine with over $144 billion in total sales last year. This diverse revenue mix, spanning across upstream production and downstream refining and marketing, provides Chevron with an incredibly resilient business model. The global footprint ensures that the company can capture energy demand across various markets, providing a solid foundation for its long-term stability and future growth potential in a shifting global energy landscape. The EPS and revenue snapshot provides a look at Chevron's recent performance versus analyst expectations. In the most recent quarter, the company reported an EPS of 1 point woo, error dollars beating the 1 point psi, ye estimate by 7 point woo ba percent. Revenue for the same period reached 40 liu point ki ju billion dollars. Looking ahead to the next report date on April 24, 2026, analysts are already raised their expectations for Q1 2026 with an EPS estimate of 1 point woo ju dollars on revenue of 48 point ye billion. This beat and raise pattern is a primary driver of the positive sentiment we've seen in the stock. The long-term forecast for the remainder of 2026 shows a projected continued performance around current levels. This consistent delivery of results against professional models is building significant shareholder confidence. For investors, the ability to repeatedly exceed expectations during a period of market transition is a powerful signal of management's operational control and the strength of the company's core assets. The detailed revenue forecast chart visually confirms the steady performance of Chevron's top line. The orange bars represent reported revenue, while the gray bars indicate analyst estimates. In Q4 2025, we see the clear beat with revenue landing at 7 billion against the 9 billion estimate. Looking forward, the forecast bars point toward a consistent quarterly performance, with expectations holding near the $50 billion mark through early 2027. This stability in estimates reflects Wall Street's belief that Chevron's diversified portfolio can navigate the current energy cycle effectively. For analysts, this chart is the benchmark for measuring the company's revenue momentum. The fact that actual results have consistently landed near or above the estimated circles is a reassuring sign that management is successfully managing its global production and marketing operations. Seeing these forecast bars hold steady provides a high confidence baseline for the company's near-term revenue potential as it continues to execute on its long-term strategic plans. Looking at key valuation ratios, Chevron stock currently reflects its leadership position in the energy sector. The trailing price-to-earnings ratio, or PE, stands at 22.2 san, while the price-to-sales ratio is 1 woo. The valuation ratios chart tracks how these multiples have shifted over the last 5 quarters. We see a steady upward trend in both ratios, with the PE ratio reaching its highest level in the period during the most recent quarter. This expansion in multiples suggests that investors are now willing to pay a higher premium for each dollar of Chevron's earnings, likely due to the company's strong cash flows and its commitment to returning capital to shareholders. While a PE of 22 is higher than historical norms for energy companies, it reflects the market's belief in the stability and quality of Chevron's diversified operations. For investors, these metrics are essential for assessing whether the current stock price accurately reflects the company's future profit potential and its sector-leading market position. The financial stats chart provides a comparative look at the PE and price-to-cash flow ratios over the last year. The price-to-earnings ratio, shown in dark blue, has trended upward, reaching 22.2 san in the most recent quarter. The price-to-cash flow ratio, shown in light blue, currently stands at 8.2 ki. This relationship between earnings and cash flow multiples is critical for evaluating the quality of Chevron's profits. The company displays a total enterprise value to EBITDA ratio of 11 liu psi, highlighting its operational profitability relative to its overall market valuation. The steady trend in these ratios suggests a market that is pricing in sustained high-quality performance. For analysts, these metrics are the benchmark for comparing Chevron against its peers in the global energy industry and for assessing whether the current stock price accurately reflects the company's future cash-generating potential. The consistency here provides a solid baseline for valuing the company as it moves into its next decade of growth and resource development. Chevron's balance sheet reflects its massive global infrastructure and significant financial scale. Total assets for the most recent quarter, Q4 2025, reached a staggering $324.01 billion. On the other side of the ledger, total liabilities stood at 131.BA billion. This indicates a massive total equity position, highlighting the company's financial fortress. The visual data shows a steady expansion of the asset base over the last several quarters, while liabilities have remained relatively controlled. For analysts, the relationship between the company's asset growth and its liabilities is a key indicator of its long-term financial stability. The scale of this balance sheet provides Chevron with the financial muscle to continue investing in major energy projects and to weather potential macroeconomic headwinds. Understanding this position is essential for evaluating the company's overall solvency and its ability to fund future growth initiatives. This rock-solid financial footing is a huge competitive advantage, allowing the company to navigate economic downturns from a position of strength. Cash flow generation remains a foundational strength for Chevron. In the most recent quarter, Q4 2025, the company reported 10.2 billion dollars in cash from operating activities. Free cash flow for the quarter reached 5.0 billion dollars. On the investing side, the company saw an outflow of 4.2 billion, reflecting continued deployment of capital into long-term energy infrastructure. Financing activities resulted in an outflow of 7.8 billion, likely reflecting debt management and shareholder returns. For the full year 2025, the company generated 16.8 billion in free cash flow from 19.03 billion in operating cash. These figures demonstrate Chevron's ability to generate massive amounts of real cash, which is then used to fund its expansion and reward its investors. The consistent production of operating cash is the engine that allows Chevron to maintain its competitive edge while scaling its global operations. For analysts, the strength of the cash flow is perhaps the most reassuring sign of the company's health. Evaluating Chevron's overall financial health and solvency, we see a company with significant capacity. Total debt currently stands at 46.2 billion dollars, which is well supported by the company's massive cash flow and asset base. The company holds 6.2 billion in liquidities and equivalents, providing an immediate cushion. The quarterly free cash flow of 5.0 billion further underscores its ability to cover its obligations. For analysts, the relationship between debt levels and cash flows is a primary metric for risk assessment. While 46 billion in debt is a large nominal figure, it remains manageable relative to Chevron's over $300 billion in assets and its consistent ability to generate over 10 billion in operating cash per quarter. This snapshot confirms that Chevron maintains a very healthy financial situation with high solvency and the liquidity needed to fund its ongoing operations and its ambitious dividend program. For investors, this balance sheet strength is a key pillar of the company's defensive stability in a cyclical industry. Chevron's commitment to returning capital is a primary draw for long-term investors, as evidenced by its strong dividend history. The company currently offers a very attractive dividend yield of 3.0%. The most recent quarterly dividend was $1.73 per share. The dividend history chart shows a steady and consistent increase in payouts over the last several years, highlighting management's confidence in the company's long-term cash generation. For income-focused investors, CVX remains a cornerstone holding, offering a reliable and growing stream of passive income backed by one of the world's most profitable energy revenue engines. The total dividend per share for 2025 reached 6.0 dollars, further underscoring the company's status as a top-tier dividend grower. With a payout ratio around 44%, the dividend remains well covered by earnings and cash flows. This disciplined payout strategy ensures that shareholders are rewarded as the company continues to scale its operations globally. The next ex-dividend date is set for February 17th, 2026. In conclusion, Chevron Corporation's Q4 2025 results reveal a company with an exceptionally strong core business led by its dominant downstream operations and a robust global asset base. From consistent earnings beats and record cash flow generation to a rock-solid balance sheet and an attractive dividend growth story, the fundamentals remain very healthy. While valuation multiples have expanded recently, the company's leadership in the global energy market and its disciplined capital allocation provide a powerful tailwind for the foreseeable future. Chevron continues to be a critical player in the global technology and energy sectors, providing both growth potential and essential defensive stability for long-term investors. Thank you for joining us for this deep dive into the numbers. Don't forget to like, subscribe, and hit the notification bell so you never miss an institutional grade analysis of the markets. We'll see you in the next analysis.